The headwinds that we've seen for gold seem to be abating a little bit as volatility sees a bit of a step up, sending equity markets down, possibly, albeit briefly. If you look at my colleague Chris Beecham's comments this morning on charting the indices, he explained a little bit more detail about the fact that the possibility is that we could well see more highs to come. But at the moment, at least, the volatility is up, equity indices are down. Additionally, the weaker dollar is adding to the attractiveness of gold. Also, we should look forward to Friday in Washington to see if President Trump succeeds in getting through his healthcare reforms. That's key to allowing him the funds to then lay out his fiscal plans. It's the promise of tax benefits for corporates and for individuals that has really driven equities up recently. Could all that unwind? Well, let's take a look at the price action on the gold chart to see exactly where we are at the moment. We got gold at 1245. We've bounced recently off this level of support down here at just shy of the 1,200 level. Let's take a look first of all at these two lower panels. First of all, the relative strength index, looking as though there's plenty of upside still to go. If you want to continue to go into gold based on the RSI, this is a 14-day RSI. Let's move away from that one. And we've then got here the second panel. The one I want to talk about is the MACD. This is also showing an indication that gold wants to move higher. These histograms are getting larger. That's the gap between the blue and the red line, and this indicates that we've still got upward potential. Let's move away from that and open up this a little bit more. You can see in the bottom left-hand corner at the moment 73% or three-quarters of clients on the IG platform are currently long gold. Now this is what's happening, and we've got this bounce off that we can see recently here. I've overlaid a Fibonacci on this to give you a better idea as to what this retracement has meant. From the highs that we saw back on the 27th of February to the swing low that we had on the 10th of March, we have just touched that 76.4% retracement. That's the move back. Now this is a fairly significant Fibonacci level. So now how does this fit into the plan of going long gold? Well, we are at a position now where we are perhaps maybe at a point at which traders are questioning the rise that we've seen. The questions are, has it gone far enough, bearing in mind the backdrop? As I said, we've got the backdrop with increase in volatility and a drop in equity markets. Equities are beginning to look a little bit more favourable than they were even in the early part of this Wednesday's trade across the European markets, and potentially we could now even see a little bit of a rise at the start of the US trade, which is why we got this hesitancy here at the 76.4. Now, if there is a turnaround in this, and there is more concerns about the fact that President Trump may find it more difficult to get his healthcare reforms through, there is upside to go. The total retracement would take it all the way back to this high here that we saw on the 27th of February, which would be 1,264. Nothing like the point we were at, of course, when we saw the highs last year. Back in July 2016, we were up at 1372, and you can see that was the point at which I've drawn this line here. So that's an upside potential target to look at as well. Now, if you do want to go long gold at these levels, you'll be looking to put a stop in at around about the 1226 level, and you go long, and you're looking at your first point of profit would be the 1256.8, which would be where this down trend here, this descending trend line here would hit. If it breaks through that, then of course you've got that 1264 as the high. Now, if you think that there is the expectation that interest rates, that equity markets are going to start to rise, and that we are seeing a more favourable attitude to the risk-on play, then you've got a problem for gold. If you're looking at gold on the way down, you'd then be looking at it put a stop not too far above where we are at the moment, possibly at this line here at 255, which would be the descending trend line, and then you'd be looking to take it lower. How much lower? You're then looking to take it all the way down, potentially to this 1226 level, which had previously been the low that we had as of yesterday's session. Yesterday saw an interesting day's trade where we saw the bears take it down, but the bulls pushed it up, and gold succeeded in having that big day of gains in yesterday's session. That would be your first price target at 1226. As I said, much of it hinges on Friday's news from Washington, and can President Trump push through his healthcare plans that he will then underscore his ability to be able to lay out his fiscal plans for the US economy.